Bring you some unusual option activity, and I try to highlight why it is unusual. This is the 17th of July. It is regular July expiration. And let's get started with 3 at 3. Disclaimer says that this is for educational and informational purposes only. That is all. Thank you. Intellectual property said, hey, this is our intellectual property. Pete and I created this, the Heat Seeker. We talk about it. We don't distribute it. So if you'd like to use something, you need to ask for permission before you use it. That said, thank you very much for joining us today. Let's take a look at what happened with Twitter, because Twitter, we cited the activity yesterday when the stock was 34.61. You might recall it had fought its way back from an aggressive sell-off that occurred when they were rumored to have not policed their app as well as they should, perhaps. Turns out it might have been an inside job. In any case, stock was $34.61. We talked about the October 36 calls, and those calls traded higher as the stock trades higher today. Stock is now over $1 higher than when we cited it yesterday, or actually, yes, yesterday. Those 36 calls are higher as well. Stock is up $1.20 from the level that we saw the stock at yesterday. Bang. If you'd like to learn more about how we do what we do, you can go to marketrebellion.com/get started, because we can teach you about the basics of trading stock, trading options, trading cryptocurrencies, or trading futures. You decide what you want. And by the way, in the App Store, our app is live now. The crypto trading app and crypto charting is live in the App Store. So if you go to the Apple App Store and you enter Market Rebellion, you'll see the app. Soon, virtually all of our services will be available on that app. So you won't just have to go to a web browser and then look for what's going on there, even though, of course, our updates for our subscription services get emailed out to you if you like as well. But having that right there on your phone is a pretty cool thing. That is live in the App Store for crypto right now. So let's take a look at this one, shall we? QGEN. QGEN, stock is $48. They were buying the August 49 calls. So the bits of information that are embedded in this are the following. Number one, that, there we go, that they're buying $1 out of the money calls. They paid $75 to $95 for each and every one of these 3,400 calls that were purchased. Now, they were bought mainly in one single print, meaning that somebody that's got a decent amount of money, because let's just pick a number like 80 cents times 3,000, that's $80 times 3,000. It's $250,000 trade. That's why we like to follow those trades, folks, because when somebody wants a commitment like that, when they have that kind of money on the table, we like to say, well, they probably have good reason, and I want to follow those folks. So there you have it for QGEN, buying $1 out of the money calls. Where are those calls now? Well, they're higher because the stock is $48.50 as of the time I did this slide. So stock has moved up by approximately 50 cents, and those options are moving higher as well. So that is our first of our 3 at 3 trades. Let's take a look at another, NTNX. NTNX, NTNX. So, and by the way, just to show you that we listen, when you see we moved me, as far as this Periscope, we moved me into the upper left corner because some of you were saying it was blocking some of the information. Now, it still does a little blocking of the charts, but not much I can do about that, unfortunately, folks. So, NTNX. Stock was $20.52 at 11:21 today, just before the halftime report. And I talked about it. Talked about next week's July 24th expiration calls. So again, short term. That's what that tells me. Short term. Somebody wants in, and they want in for something that's going to happen within the next 5 days. They think it's going to trade higher within 5 days. And they wanted basically just out of the money calls. They bought the 21 strike calls. And they paid somewhere between 56 cents and $1.70 for these. Why did they do that? Well, because the stock started to run. There is the stock right now, 22.81. Look at that big spike. You think those early buyers knew anything? Probably, because they started buying earlier in the day, and then bang, it pops through 22, popped 2, and briefly through $23 a share. Bang! That's what I'm talking about. So you need to be aware that this is a rapid time decay for these options. So if you followed us into this trade, you might consider selling, for instance, the 23 calls against it. Why would I say 23s? Well, because they were buying the 21 calls, as you recall, July 21 calls with an expiration of next week in NTNX. So those calls that were purchased from 56 cents to $1.70, let's say that you paid $1.50 for those calls. With the stock now at 22.83-ish, those calls, let's see, where are these 23s now then? 23s with an expiration of next week in NTNX, you could get 78 cents for those. So in other words, you'd take your ownership down from $1.50, like I say as an example, to say 80 cents. You cut it in half. Why? Because for every one option that you purchased for $1.50, if you sold these others for 78 cents or so, we're talking about basically the difference between $1.50 and 80, which is 70 cents. Call it 80 cents even. If you paid 80 cents, that spread can go to $2. So an $80 investment can go to $200. It's more than a double. I like it. I'm in these, and I intend on selling upside calls against it. By the way, these 21 calls have now traded over 8,000 contracts, not 7,000, but 8,000. And the 22 calls have traded 2,300, and they're trading for $1.20. The 23 calls have traded 6,400, and they're trading for 78 cents. So there you have it. Our second of our 3 at 3. Let's do our third and final right now, COMM. So COMM, this is CommScore, C-O-M-M, CommScope rather, sorry. CommScope Holdings. They were buying the August 10 calls. So just take it out here to August expiration. And at the 10 strike, they were buying these calls. They bought them from $40 each to $80 each. Why is that? Because every option is for 100 shares of stock. So when you're seeing that and somebody's paying $40 for an option, that's a pretty cheap shot. Goes to 80, it's not quite as cheap anymore, is it? But still very interesting. And take a look at that. It isn't 6,700. It is 45,000 of those that had changed hands at that August 10 strike price. So that's something worth noting, isn't it? That 4.5 million share equivalent are changing hands in there. So that's why I want to follow them. 4.5 million contracts times, let's say, like 90 cents or wherever these are trading right now. Where were they before? Well, 40 to 80. Now they're 90 cent bid. So 90 cents. This is about a $4.5 million trade. I like following big trades like that. And look, people bought the July 20s as well. They bought the August 9s as well. They bought a whole bunch of these different strikes in here. I am in these. I intend to hold these August calls for probably 2 to 3 weeks. I believe that's what I said on the halftime report as well. Bang! Thank you for joining me, folks. If you'd like to learn more about what we do at Market Rebellion with unusual option activity, you can go to marketrebellion.com/UOA, which stands for Unusual Option Activity. That is marketrebellion.com/UOA. Thank you for joining me today. I hope you enjoyed the presentation. I hope if you've made some money on the trades this week, that maybe you see fit to tell a friend about it, because we'd love to expand the reach, and we appreciate all